You might have heard of Robert Kiyosaki's famous quote, "Money doesn't make you rich, it's what you do with the money that makes you rich." And it's true, investing in the right assets can be a game changer when it comes to building wealth. So in this video, we'll dive into 6 assets that not only beat inflation, but also provide significant returns on investment. Let's get into it. Number 1, precious metals. Now, you might be wondering, why are precious metals such a big deal when it comes to storing value for the future? Well, let's break it down. In an ever-changing economic landscape, it's necessary to have assets that can withstand the test of time. Precious metals have a long-standing reputation for being a reliable store of value in times of financial uncertainty. So, they act as a safeguard, protecting your wealth from the ups and downs of the market. Speaking of market volatility, have you ever wondered why the value of currency sometimes takes a nosedive? One of the key culprits is the government's printing more money. When an excess supply of currency floods the market, its value tends to decrease due to inflation. This is where precious metals shine. Unlike fiat currencies, gold, silver, and platinum possess inherent scarcity. Their limited supply makes them highly sought after, which helps maintain their value even when paper money loses its luster. Let's talk numbers for a moment. Gold, for instance, has a fascinating history of price appreciation. Over the years, it has consistently shown an upward trajectory in value. From ancient civilizations to modern times, gold has held a special allure for investors seeking stability and wealth preservation. This remarkable track record proves its resilience as an asset class. And who knows, with all the global economic uncertainties, the potential for future gold price increases is certainly something to consider. Now, you might be wondering, are there any alternatives to gold? Absolutely! Silver and platinum are 2 precious metals worth exploring. Silver, often referred to as poor man's gold, has its own unique advantages. It's more affordable than gold, yet still possesses the qualities of a precious metal. Platinum, on the other hand, is renowned for its rarity and versatility in industrial applications. By diversifying your precious metal holdings, you can tap into different market dynamics and potentially maximize your returns. Number 2, land and real estate. When we talk about land, we're talking about an asset that has held historical value and has seen perpetual demand throughout the ages. From ancient civilizations to modern times, people have always needed a place to call home, build businesses, and grow crops. That's why land continues to be an asset with inherent value and potential growth. Another exciting aspect of real estate is its potential as an inflation hedge. Inflation, as we know, erodes the purchasing power of money. But here's the interesting part. Real estate tends to appreciate in value along with rising costs. When inflation strikes, the price of housing usually follows suit. By investing in real estate, you can potentially protect your wealth from the clutches of inflation and even enjoy significant gains as property values and their rise. And let's not forget the sweet taste of housing price appreciation over time. While short-term market fluctuations are normal, real estate has a historical track record of appreciating in value over the long haul. So if you're looking for an investment that has the potential to grow your wealth steadily, real estate might be the best ticket. With patience and smart decision making, you can watch your properties increase in value and build substantial wealth over time. Number 3, collectibles. When we think of collectibles, we often envision rare and unique items that hold a special place in our hearts. But did you know that collectibles can also be a lucrative investment? That's right, investing in collectibles such as vintage cars, rare art pieces, luxury handbags, limited edition watches, and iconic books can yield significant returns over time. These items not only have inherent value, but also hold a special appeal in collectors and enthusiasts worldwide. One of the key factors that contribute to the increasing value of collectibles is their scarcity. Whether it's a limited production run, a unique design, or a rare piece of history, collectors are willing to pay a premium for these one-of-a-kind treasures. As time goes on, the supply of such collectibles diminishes, while the demand continues to rise, driving up their value. So by investing in carefully selected collectibles, you have the potential to see your investment appreciate significantly. Number 4, safe haven currencies. Geopolitical stability plays a vital role in determining the value of a currency. When the world gets a bit chaotic, investors seek refuge in currencies tied to politically stable countries. Take Switzerland, for instance. This neutral nation has a reputation for maintaining a sturdy political environment and boasts a robust legal system. That's why the Swiss franc is often considered a safe haven currency, attracting investors from all corners of the globe. Switzerland's iconic system is like a well-oiled machine, contributing to the strength of the Swiss franc. The country possesses a highly diversified and advanced economy with a particular emphasis on precision manufacturing and innovation. Furthermore, Switzerland's financial services sector, including its renowned banking institutions, adds credibility to the Swiss franc. Investors regard Switzerland as a reliable and prosperous nation, which makes its currency all the more appealing during uncertain times. During periods of geopolitical or economic turmoil, safe haven currencies like the Swiss franc, British pound, and Chinese yuan have historically experienced appreciation in value. For instance, let's consider the example of the Russian-Ukraine conflict. As tensions escalate between these nations, investors tend to seek refuge in safe haven currencies. During such times, the demand for these currencies rises, leading to an increase in their value relative to other currencies. Don't forget to subscribe and hit the notification bell to stay updated with our latest content. Enjoying the video? Give it a thumbs up and share it with your loved ones. Now, let's jump right back in. While Swiss bank accounts may not be easily accessible for smaller investors, there are alternatives to consider if you're a smaller investor. You can explore options like investing in Swiss franc denominated financial instruments or exchange traded funds that provide exposure to the currency. In addition, there are reputable offshore banking options available in other countries that offer stability and security, even if they aren't synonymous with the Swiss banking system. Number 5. Value stocks and dividend-focused mutual funds. Now, as Robert always emphasizes, stocks have the potential to deliver higher returns than simply keeping your cash under the mattress. So, let's break it down and understand the differences between value stocks and growth stocks. Alright, so value stocks and growth stocks might sound similar, but they have distinct characteristics. Value stocks are like hidden treasures in the stock market. These are companies that might be undervalued at the moment but have strong fundamentals and long-term growth potential. On the other hand, growth stocks are all about investing in companies that are expected to grow rapidly in the future. They might not be as stable as value stocks, but they carry the allure of significant capital appreciation. So, depending on your investment style and risk tolerance, you can choose between the stability of value stocks or the growth potential of growth stocks. Now, let's talk about the perks of value stocks. One of the main attractions is their lower risk and steady price appreciation. Value stocks often belong to well-established companies in mature industries, meaning they have a track record of stability. While they might not experience explosive growth like some high-flying growth stocks, they offer a more conservative investment approach. With value stocks, you can potentially enjoy a steady rise in stock prices over time, which can contribute to your long-term financial goals. Number 6. Sovereign guarantees, government securities, GSX. To understand sovereign guarantees, it's important to first grasp the concept of legal tender and fiat currency. You see, legal tender is the currency that a government declares as acceptable for settling debts within its jurisdiction. Fiat currency, on the other hand, is not backed by a physical commodity like gold, but rather by the trust and confidence people have in the government issuing it. So when it comes to sovereign guarantees, we're talking about the stability of governments backing their currencies. Governments play a crucial role in ensuring the stability and value of their currencies. Unlike cryptocurrencies or privately used currencies, government-backed currencies enjoy a level of trust due to the backing of sovereign guarantees. Governments have the power to regulate and manage their economies, which gives them the ability to stabilize their currencies. This stability makes government securities an attractive asset for investing looking to preserve their wealth over time. After all, when you invest in a sovereign guarantee, you're essentially putting your faith in the government's ability to honor its financial obligations. Investing in government securities like GSX can be a wise move for wealth preservation. These securities are considered low-risk investments because they're backed by the full faith and credit of the government. Governments issue these securities as a way to raise capital for various purposes, such as funding infrastructure projects or managing budget deficits. By investing in GSX, you can enjoy the benefits of preserving your wealth while earning a better return compared to simply holding cash. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.